Hey there, and welcome to the Deep Dive. We slice through the noise to get you the essential insights.
Good to be here.
So today, we're plunging into something pretty eye-catching, actually. Johnson & Johnson shares. They've recently, well, shot up, leading gains on the S&P 500. Added something like, what, 14% since the year started?
It's certainly been a notable surge, yeah. Definitely drawing a lot of investor attention.
Absolutely. So, for this deep dive, our mission is pretty clear. Let's unpack J&J's latest second quarter results.
And that lifted full-year outlook, too.
Exactly. I mean, as a major medical device and drug maker, what J&J does, it has these huge ripple effects, right? Across the economy, healthcare.
Definitely.
So we're going to help you quickly understand what's really driving this, strong performance and their optimistic view.
Highlighting the key financials, the strategy.
Yep, the strategic moves and, even some potential headwinds they might be facing.
It's a critical moment for a company of J&J scale, for sure.
Right.
And understanding these pieces gives us a clearer picture, not just of their future, but maybe broader trends in global health.
Definitely. Okay, so let's get right into those numbers that sparked all the excitement. J&J's Q2 results. They didn't just meet analyst estimates. They kind of sailed past them.
They did.
So, okay, let's unpack these numbers a bit. When a company beats on both counts like this, earnings and sales, what's the real signal to the market? Is it just the numbers themselves or something deeper?
Well, what's truly fascinating here isn't just that they beat, it's the underlying strength it shows.
Okay.
We're talking adjusted earnings per share, hitting $2.77.
And adjusted just means?
Right, good question. It means they've stripped out certain one-time items, gains or losses, to give a clearer view of the core business profitability.
Got it. Core performance.
Exactly. And sales, they reached $23.74 billion. That's a pretty impressive 5.8% increase from the same time last year.
Wow. Okay.
And both figures, the EPS and sales, they significantly surpassed those projections compiled by Visible Alpha.
Visible Alpha, right? The data provider.
Yeah, known for their analyst consensus figures. So this kind of robust operational performance, where they're doing well with supply chains, product uptake is strong. That's a much stronger indicator than just like a one-off accounting win or something.
That's a really crucial distinction. It tells us this isn't just luck. It's about, efficient operations.
Right.
But, okay, past performance is one thing. What really gets investors excited is the future vision, isn't it?
Always.
And J&J isn't just doing well now. They seem really confident about what's ahead.
Yeah.
They actually lifted their full-year forecasts for sales and adjusted EPS.
Precisely. And if we connect this to the bigger picture, raising guidance like this, it signals, very strong internal projections.
And market confidence.
And deep market confidence, absolutely. Their new sales forecast range is now $93.2 billion to $93.6 billion.
Which is up from?
Up from the previous $91 to $91.8 billion range. So a decent jump.
Yeah.
And for adjusted EPS, they're now projecting $10 and $10.90. That's an increase from the earlier $10.50 to $10.70. So, it isn't just a tiny tweak.
No, that's a significant bump.
Yeah.
Suggests they really expect this momentum to continue.
That's the signal, yes. Continued momentum and demand for their portfolio.
That's a powerful signal, especially for a company of, J&J's size. And the CEO, Joaquin Duato, he gave a bit of insight into why they're so optimistic.
Right. He talked about the portfolio and pipeline.
Yeah, he emphasized J&J's portfolio and pipeline, positioning them for, quote, elevated growth in the second half of the year. What does that emphasis on game-changing approvals in specific areas really mean? For healthcare, for J&J's place in it?
Well, this really brings up the power of a strong pharmaceutical pipeline, doesn't it?
It does.
Duato mentioned these anticipated game-changing approvals and submissions, as you said. And the areas are critical. Lung cancer, bladder cancer.
Right.
Major depressive disorder, psoriasis, surgery, cardiovascular health.
Big areas, huge markets.
Exactly. These aren't just, another Me Too drug. They potentially represent real breakthroughs where treatments might be limited or have tough side effects.
So, addressing unmet needs.
Significant unmet medical needs in massive markets. So for J&J, it means opening up potentially entirely new revenue streams.
And maybe changing how doctors treat these conditions.
Potentially redefining patient care in those fields, yeah. Cementing their position as an innovator.
Okay, so it sounds like they're making some very strategic bets on where medicine is heading.
Seems that way.
But of course, no global giant operates in a bubble, right? It's never entirely smooth sailing.
Never is.
There are always complexities, external pressures, like economic stuff.
Indeed. While the outlook is, overwhelmingly positive, it's vital to consider potential headwinds.
Like tariffs. I remember hearing something about that.
That's one, yes. The company's CFO projected tariff costs of about $400 million for this year. That figure came out after the first quarter results.
Okay. And that's in the context of, well, previous talk about potential tariffs on pharma imports.
Exactly. But what's fascinating here is how a company tries to balance these potential external costs, like tariffs, with these massive long-term strategic investments they're making.
You mean the manufacturing investment?
Precisely. Johnson & Johnson committed earlier this year to increasing its investment in U.S. manufacturing.
And the number was huge, wasn't it?
Astonishing, really. $55 billion expected over the next 4 years.
$55 billion. Wow.
Yeah. I mean, that $55 billion commitment, it isn't just substantial. It feels like a really profound strategic move towards domestic manufacturing.
Sort of insulating themselves.
Potentially, yeah. Insulating from future geopolitical shifts, maybe supply chain issues. And it also acts as a kind of counter-narrative to those tariff threats.
Interesting angle.
It really shows a forward-looking approach, even with these immediate challenges.
That's a truly remarkable sum. It really does hint at a much larger strategy beyond just the immediate bottom line.
I think so.
Okay, so to sort of bring this deep dive into Johnson & Johnson together,
right?
We've seen a company clearly on a significant upswing. It's fueled by impressive Q2 results that beat estimates, a confident boost in their full-year forecasts, and this really promising pipeline targeting critical health areas like cancer and mental health.
Don't forget the investment.
Right. And let's not forget that $55 billion investment in U.S. manufacturing. That's a real strategic statement.
It really is. It's a, multifaceted story, strong financials from good operations, a clear vision for future innovation, and this sort of proactive approach to handling a complex global economic scene.
Exactly. So for you, our listener, here's maybe a final thought to chew on. How does a company as large, as influential as Johnson & Johnson really balance these things, these global economic pressures like potential tariffs, with its huge, long-term strategic commitments and all this innovation in areas like cancer and mental health?
It's a big balancing act.
It really is. And what might this blend, the strong finances, the pipeline development, the national investment, what might that mean for the broader economy and, well, for you, whether you're a consumer or just watching the healthcare industry? It really highlights how interconnected all these seemingly separate factors are in the corporate world today.